Stop donating your hard-earned money to SARS. Yes, I said donating because that's exactly what you're doing when you overpay your taxes without even realizing it. Let me ask you something. If you walked into a shop and gave the cashier 1,000 rands when really your groceries cost 700 rand and they just took your money and smiled, how many times would you do that before you got angry? But that's exactly what you do when it comes to taxes. Too many business owners do exactly that every single year. They overpay and underdeduct and end up donating money to SARS. But here's the truth. SARS won't stop you if you're overpaying more on your taxes. They're not going to give you a pat on the back or send you a thank you note. They'll simply collect your overpayment and you'll carry on thinking it's the cost of doing business. But it's not. It's the cost of not having a proper tax strategy. So if you're not intentional about your tax planning, you're losing a lot of cash for no reason. I'm Sia, I'm a qualified accountant, and I lead a team of 14 accountants who help your business to pay less taxes, stay tax compliant, and avoid unnecessary tax penalties. And in this video, I'm going to show you tax strategies that you can start using today to stop donating money to SARS. Let's dive in. I know you might be thinking, Sia, I don't have time for this. I'm already juggling staff drama, invoices, compliance nightmares, and cash flow headaches. And hey, I get it. Tax feels just like another admin problem, one you'd rather outsource, ignore, or tackle during quiet season, which, let's be honest, never comes. But here's the thing no one tells you. Ignoring your tax plan is just as dangerous as ignoring your sales, because ignoring both will cause you to lose cash. And sometimes that tax overpayment is the exact amount you should be using to reinvest in the business, hire help, or buy back your time. Let me give you an example. We had a client come to us last year. Great business, compliant with SARS, paying their taxes on time, clean books, no drama. But they were overpaying their taxes by over 300,000 rands a year. Not because they were doing anything wrong, they simply never looked deeper than what the accountant was telling them. We did one review, one restructure, and saved them over 300,000 rands in taxes the following year. And that same business is now using that money to grow their business. They didn't break the law. We didn't cook the books. It was just a better understanding of how to align their income and expenses and timing with the law. Now they're using that money to grow the business, train new staff, and increase their profit margins, not to make donations to the government. What would you do with an extra 300,000? A new staff member, pay off a vehicle, down payments on a new office space, or maybe just sleep better at night? Now, here's the crazy part. Most business owners think they're doing everything right. And they are, from a compliance point of view. But compliance isn't the same as strategy. Compliance is filing returns on time. Strategy is deciding what those returns should look like in the first place. SARS gives you options, but you have to choose them. They won't do it for you. They won't tell you when you're wrong. And most accountants, they'll keep you compliant. They'll file your returns, but they will not create a tax plan to help you save on taxes. Now, let's address the elephant in the room. When I say tax strategy, some people start thinking tax evasion or cooking the numbers or hiding income. Let me be clear. That's not what we're talking about. We're talking about 100% legal SARS compliant strategies that exist specifically to help businesses grow. These include splitting income streams properly, claiming what you're legally entitled to claim, and optimizing your payroll structure, making use of allowances that exist in the Income Tax Act, adjusting when and how you incur expenses. This isn't tax evasion, it is smart business. Think of it like this. Paying tax without a strategy is like going on a road trip without Google Maps. You might get there eventually, but you'll end up wasting time, burning fuel, and maybe even end up in the wrong place. But with a roadmap, you get there faster, cheaper, and less frustrated. That's what a tax strategy is to your business. It is your financial GPS. So, what can you do to stop donating money to SARS? The first thing is to ask your accountant when last did they do a strategic review of your taxes. I'm not talking about filing your returns. I'm talking about an actual tax plan to help you save on taxes. Step 2, identify where your business could be missing out on opportunities. For example, are you making use of all allowances that you're entitled to? Are your dividends and salaries optimized? Step 3, book a call with somebody who understands both tax compliance and tax strategy. Even one change could shift your tax position significantly. Here's the bottom line. You built your business to build wealth, not to donate to SARS. So if you're ready to stop donating extra money and start keeping more of what you earn, we can help. Book a 30-minute call with us, link in the description. Let's see where the leaks are and see how we can fix them. And if you found this video helpful, share, like, subscribe so you can also participate in helping other business owners in South Africa to stop donating money to SARS. I'll see you in the next video.